Friday 20 September. As usual, we start with the critical price points. First, the weekly chart. We annotate, this is the daily rejection block. This is the weekly chart, but I wanted to annotate that because yesterday that's where we left, and this is also somewhat the midpoint. Midpoint is here somewhere, so I found that a significant price point. And then the weekly price points for today's trading was the weekly high of August 26 and the weekly open of August 26. Then we have this wick. We divided that up in quadrants, and we see that the 75% range, you'll see that that's the low, and then the 25% range is used as support. So we zoom into the 1 hour chart. This is Friday trading. As you can see, the high of the day was formed at the weekly high of August 26 weekly high. Price almost closed at above the weekly open. As you can see, the 75% range of the weekly wick is being used as the close of the day. So then we have this day. We can see the 75% range of the daily wick. That is an important price point because later on it will become clear. Then we are in the 4 hour chart. We see the 4 hour fair value gap. We don't trade into the midpoint of that. And then we draw up the Thank God it's Friday setup. As you can see, price almost closed within that range. We meander around that range, and then we have the significant price points with the high and the low, which is in close correlation to the 4 hour fair value gap. This looks messy. We have the 50-minute chart. That yellow line was that 75% range of the wick. It was important because we have the new day opening gap of that. The midpoint of that exactly is that 75% range. So that's a significant price point. Once again, you can see all the price points in that. We have the high, the weekly open, we have the Thank God it's Friday range, and we have the fair value gap. Everything that we just mentioned is on this chart. So the entry model today was a very easy one. This was the first fair value gap extended out in time, and then we leave relative equal highs. We leave the Thank God it's Friday range. We use this as support, and then I'll explain this trade in the next couple of slides. As I said, the buy side lunch macro is our target now. We have this as real support, the 4 hour fair value gap. We inverse this, come to the midpoint of that, and then trade up. Then we have the price delivery. Once again, this messy price action. So we clean it up a bit, naked chart. Immediately you can see relative equal highs that we cleared out, and then we have these relative equal lows that we can have as potential first target. This is the first target, then second target, and then we leave one for our ideal exit to train our exit model. This is the Thank God it's Friday range. As you can see, price rallied above that, then it rallied down to take out these sell side liquidity, draw into the 4 hour chart, and then immediately comes back, comes down again, immediately comes back, stops here. Bodies respect that, and we close within that range. So that's that 75% daily range wick in close correlation to the new day opening gap. It's very messy, so I'll just new day opening gap at the low of that. We annotate that because the high and the low are very close to each other. Then we have the high of the day, the weekly high of 26th of August is used today as resistance, and then we have the low of the day, the 75% range of that weekly wick is today used as support. On top of that, we have the 4 hour fair value gap. Later on, we'll see that the 25% range is being used as support. Am I going to? Yeah, you see here, it's that point of support, the 25% range of that. So let's start with my model, the difficult model, the AM session, where all the sheeps go to the watering hole to try to get some food, and only the best can survive. So at 9:30 we open at 20,000.35, 20,005.35, excuse me, which is lower than yesterday's settlement price at 20,000 0.55. And so we have a small range opening gap of 20 handles, which is small, so we can expect a choppy range price action. The previous day was also a very big range. Today is Friday, and like I said, we have a small, this should be 20 handle range. Smaller than 20, it will probably be muddy, and we should wait to minimum at 550 till 1010. 40 is ideal, so we can expect a trade down to in the first 30 minutes and expect a trade down to the midpoint of that, or up to the midpoint of that. And 100 is a big range, so we don't have to expect a trade down to the midpoint of the opening range gap. Use Thursday, September 16 for an example. That was where we opened at 9:30, we draw lower, and then once again we hit the buy side, draw higher, we inverse somewhere in here, short it, then we draw up to not even the 25% range. But today is a new day, so at 9:50 we open, and at 9:31 we have our first fair value gap. So at 9:31 we take out this buy side, we trade lower back into the yesterday's first fair value gap. We don't use that as resistance now, we don't close below that, we use that as support. We draw higher again, take out these buy sides again, draw up into the weekly high of August 26, go lower, don't do anything except for closing underneath the first fair value gap. Don't take out this, so we leave relative equal lows. Now draw higher and draw into the new day opening gap, draw lower again, relative equal lows, draw higher, go into this new day opening gap again, then take out this low but leave open these two lows. Then we draw lower and take out this, and then leave these relative equal lows. We draw up higher once again, the body is respecting new day opening gap. We don't even come close to the weekly high, we don't come close to the consequent encouragement of this wick. So now we draw down at 9:50, we draw down, we close under the first fair value gap from today's fair value gap with a breakaway gap. Then we draw lower, we come into the yesterday's fair value gap. As you can see, the bodies are respecting that, so what do? We check this wick and we have the consequent encouragement of that. Once it trades back in that, we trade down. If we miss this entry and we see this, then we have this volume imbalance, this candle in here. Once it trades back in that, we can trade down. As you can see, this is real resistance now because we took out sell side. On top of that, the weekly open of that. As you can see, we trade back up into the volume imbalance, we trade down to take out this sell side. We meander around, we don't take out this, we don't take out this, and we keep engaging sell side. So then we draw down with in mind that we keep these relative equal highs as a potential lunch side macro to draw then back up into the TGIF range. As you can see in here, we come into the 75% range in the 4-hour fair value gap. We do that fast, and then we leave fast. We inverse this fair value gap. On top of that, I wanted to see this fair value gap, not this fair value gap, but this fair value gap, because why? The 25% of the weekly range of that. This is consequent encouragement. Could also have been a very good entry. When price trades down into that, we didn't get that. So the next thing is this. I need to see this inverse. Once it trades down in here, I enter. And now I take my stop loss in here, this candle, because it can potentially drop to here. Don't like to see that. Wanted to see that as a breakaway gap, which it did. And then it rallied up. And at 1 p.m., we finally took out the lunch side macro. So once again, thank you very much for watching. And yeah, very nice.